we're going to have a little bit of fun here and see what we're going to do. Since for this week's lecture really is, what is blockchain and why might it be a catalyst? And I want to achieve in this semester. We're trying to do. And so what were the two readings? One was a little thing I did, and one was a thing I did with some of my colleagues, but 1974-ish. And then you had TCP/IP, which was really, and then later on in 1990, how do we move forward? Does anybody know what it was, TCP/IP? And 3Com and Cisco and, of course, Amazon that's still around today. But, or in essence, it's communications in the presence of adversaries. You have an adversary who wants the communication, you want to communicate and not let your adversaries know that communication. And this is true for ancient times. So in ancient times, there was something called the Enigma machine. Now, the movie was wonderful because it said Turing cracked it, and he did help crack it in an automated way, but actually the Polish government had cracked it in the 1930s before they fell to the Germans. And Turing built on all of that and cracked it further. And then in the 1970s, and this was here at MIT to some extent, there's private key, public key cryptography, which I'm not going to dive into today. But the riddle remained, how do you move money on the internet? Or in essence, so a peer-to-peer cash, this is the actual doctop of an email that was sent out on Halloween. I've been working on a new electronic cash system that fully peer-to-peer with no trusted third party. We're going to do this in a lot of lectures, but I'm going to try to do it in a short version. So it's time-stamped append logs, meaning you can add a little bit of information to this, and it's time-stamped. So these are these blocks being added. But this time-stamped block of data creates a database, an auditable database. And we'll talk about ledgers, particularly next week, but we'll talk about ledgers all throughout this course and how it changes the world of finance. Now, it's secured by cryptography because cryptography, remember, is communications and making sure adversaries can't pick you off. We're going to learn about hash functions. And hash functions are a really important part of crypto written here, tamper resistance and the integrity. Digital signatures, which has to do the public key, private key cryptography. And then consensus. So there's a really important part of blockchain is how do you decide who appends that next block? Because when I went back here, there's block or block. Each of these blocks, somebody has to decide who appends, who gets to pick the next block. And that's what's called consensus protocol. And there's wide debates about consensus protocol. And we'll talk a lot about consensus protocol. But in essence, it addresses something, a term called the cost of trust. And we'll talk about Byzantine generals' problems, which